Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar begins the week with momentum fading rather quickly after the recent rebound stalled towards the key area around 69.65 to 70 cents. Higher oil prices and ongoing Gulf tensions are adding to inflation concerns and keeping markets cautious. Domestic confidence data will provide some direction, although US CPI this week and Fed Chair Kevin Walsh testimony are likely to dominate the near-term outlook. A stronger inflation reading or a hawkish Fed message could increase pressure on the Aussie, while any easing in the US dollar demand may allow the currency to stabilize. However, it must clear the current level around 70 cents as the near-term cap to support a bullish outlook. Technically, though, the RSI has buckled and also the MACD is wavering and therefore could see a move back towards that key area of 68.70 this week before turning around and reassess from there. Looking at Euro, well, the market backs away rather sharply from that topside area around 115 and key point is still at 113.40.50. As long as that level holds, I do anticipate that the market will eventually recover and break through the 115 and on towards 117 as a potential target. Though a break under 113.40 could trigger a move down to 112. So do keep that in mind as stops are likely to be building underneath this region. Looking at dollar yen, well, the market has been rather whipsawed. Given the fact that rising US interest rates and continued demand for the greenback has kept the pair supported. Higher oil prices are also negative for Japan because it imports most of its energy, which increases costs and adds further pressure on the yen. As I mentioned this week, the US inflation data, which is the CPI and the PPI, will be in focus. And as I also mentioned, Kevin Walsh's 2 days of testimony before Congress will be the main focus and catalyst for this week. Looking at the market, the top side is still capping around 162.60.85, and while intact, I still anticipate a move towards 160 and to 158. But no doubt there are stops building above 162.85, so do keep that in mind in case we get a stab to the upside. Well, the market is still weighing on the support to the pound into the second day. There's changing political expectations in the UK, with Andy Burnham strengthening his position as likely successor to the next Prime Minister. Attention now turns to whether the political situation can improve confidence to the UK outlook and provide further support to the pound. But the topside rejection we can see here around 134.5 has put a little bit of pressure, and also from this shooting star could see a bit of profit taking and therefore look back towards the bottom side of the range around 133 and reassess. Well, the trend line is still holding for spot gold as the market is capped around 4,120 to 45. Pressure is back on the downside and looking back towards 4,000 as a potential target where this base is formed. I can even highlight it for you, and as you can see, there has been recent demand from here, and maybe again, if seen, could break this top side and eventually trigger. Now, a move above that trend line is seen for a measured move around 250 points. Finishing up with oil, I still am somewhat bullish. The pullback on the MACD rejected the RSI midway point and therefore could see further gains into this week on towards 74. And I did mention last week $78 a barrel as a potential target. Any weakness, well, since that $67 barrel, which is where it was holding back in February, and also the gap breakaway rally, well, the market is still finding the potential move to the upside. So keep an eye on that. Well, that's a wrap. Thank you for joining me. And as always, look out the interest rate report. I hope you enjoy the great start to the new week.